Hey, what's up, everyone? Welcome to the channel where we unlock the secrets to building wealth and achieving financial freedom. Today, I have something really exciting for you. 7 stocks set to explode, according to experts. If you're aiming to get rich in 2025 and beyond, you need to check these out. This isn't just another list of stocks you've heard 1,000 times before. We're diving into 7 carefully selected companies with massive growth potential, and the best part, we'll break it all down for you in a way that's easy to understand. But here's why you should stick around. In this video, I'm not only revealing these 7 high-growth stocks, but also answering the questions that every smart investor asks. Which of these stocks pay dividends? How often do they pay? And can you invest in them from anywhere in the world? Plus, I'll walk you through exactly how to approach these stocks, covering everything from where they're listed to the pros and cons of investing in them. So, whether you're a seasoned investor or someone just starting their journey, this video is packed with actionable insights to help you make smarter decisions. By the end of this video, you'll have a clear roadmap to position yourself for financial success. So subscribe to the channel and let's get into it. Let's kick things off with Vertex Pharmaceuticals, a biotech powerhouse. Vertex is renowned for its groundbreaking products, particularly Trikafta, a treatment for cystic fibrosis. Now, why should you care about Vertex? Analysts predict their earnings will soar by an astonishing 3,596% in 2025. Yes, you heard that right, 3,596%. But what's behind this number? Vertex faced a challenging year after its acquisition of Alpine Immune Sciences, which temporarily hit their bottom line. However, this acquisition sets the stage for long-term growth. Vertex isn't just a biotech company, it's a leader in addressing rare diseases that few others are tackling. Imagine this, a child suffering from cystic fibrosis finally getting a treatment that dramatically improves their quality of life. That's the kind of impact Vertex delivers not just for patients, but for investors who believe in the company's vision. This growth isn't just about their current product line. It's about what's coming next. Vertex has been investing heavily in cutting-edge research, including its gene-editing collaborations with CRISPR Therapeutics. These partnerships aim to tackle diseases at their genetic root, such as sickle cell anemia and beta thalassemia. Imagine a world where inherited diseases could be cured at the DNA level. Vertex is actively working toward that vision. Here's another reason why Vertex stands out. The biotech industry as a whole is growing rapidly, with a projected compound annual growth rate, CEAGR, of 13.4% from 2022 to 2030. Vertex, being a market leader, is perfectly positioned to ride this wave. Their ability to innovate and adapt to market needs makes them a consistent performer, even in volatile times. Let's talk financials for a moment. Vertex has demonstrated strong revenue growth, with a steady increase in its cash reserves. This financial stability allows the company to fund ambitious R&D projects without the need to over-leverage or dilute shareholder value. In other words, they're playing the long game. And here's the cherry on top. Vertex doesn't just develop treatments, they dominate their markets. Trikafta alone generates billions in revenue annually and continues to be the gold standard in cystic fibrosis care. This level of market penetration gives Vertex a solid foundation for growth, even as they expand into new areas. Now let's talk about what to do as an investor. Keep an eye on Vertex's earnings reports and their pipeline of potential treatments. With strong financials, a robust pipeline, and a focus on life-changing therapies, Vertex is not just a stock, it's a game changer for your portfolio. Next up, we have TG Therapeutics, a biopharmaceutical company focused on treating multiple sclerosis. Their flagship product, Briumvi, is rapidly gaining traction, and analysts project TG Therapeutics' earnings to leap by 1,719% in the upcoming year. That's a staggering turnaround for a company that was struggling just a couple of years ago. But what makes TG Therapeutics stand out in the crowded biotech market? First, let's look at the numbers. Sales are forecasted to grow by 41% in 2024 and an impressive 64% next year. These aren't just random spikes. They're part of a well-planned strategy to establish Briumvi as a market leader in multiple sclerosis treatments. Here's why this is exciting. The global multiple sclerosis market is expected to grow from $28 billion this year to over $37 billion by 2028, driven by increasing awareness and demand for advanced treatments. TG Therapeutics is perfectly positioned to ride this wave, with Briumvi offering unique benefits compared to existing therapies, such as faster infusion times and fewer side effects. Now, think about this. Getting rich isn't just about finding stocks that perform well. It's about uncovering companies like TG Therapeutics that are solving real-world problems while delivering exponential growth. Briumvi is more than a product. It's a symbol of TG's ability to innovate and disrupt. What's even more encouraging is TG's shift to profitability. After years of heavy investment in R&D, the company has finally turned the corner. This financial stability enables them to ramp up production, expand their market reach, and fund additional research into other promising therapies. But of course, no investment is without risks. The biotech sector is notorious for its volatility, with stock prices often hinging on clinical trial results or regulatory approvals. However, TG Therapeutics has demonstrated resilience and adaptability, overcoming challenges to emerge stronger. Now let's discuss how investors can take advantage. If you're looking to get rich with this stock in the upcoming years, TG Therapeutics offers a compelling mix of innovation and growth potential. Whether you're a biotech enthusiast or a cautious investor looking to diversify, this stock deserves a spot on your watch list. By the way, if you're enjoying the video so far and want more videos like this, comment below stock market so I know. Moving on, let's talk about Incyte, another biotech gem. Incyte is known for its key products, Jakafi and Opzelura, which have been driving sales growth. In the upcoming year, their earnings are expected to surge by 368%, representing a significant rebound from the anticipated decline in 2024. What makes Incyte a standout stock? First, their ability to diversify and innovate. Jakafi, a treatment for blood disorders, has become a cornerstone in its category, generating billions in revenue annually. On the other hand, Opzelura is a groundbreaking topical cream for skin conditions like vitiligo, a condition that affects millions worldwide, but has long been underserved. This dual focus allows Incyte to tap into multiple markets simultaneously, creating a strong and stable revenue base. Here's an interesting tidbit. The global market for dermatological treatments is expected to grow to $47 billion by 2027, while the oncology drug market is projected to surpass $180 billion by 2030. Incyte is strategically positioned to benefit from both these trends, making it a dual threat in the biotech space. Imagine this scenario. A patient struggling with a rare cancer or skin condition finally finds a solution through Jakafi or Opzelura. These aren't just treatments, they're life-changing innovations. And for investors, this means being part of a company that balances profitability with meaningful impact. Let's also talk about their financial health. Incyte consistently beats market expectations, as seen in their 24% sales growth in Q3 of the previous year. Unlike some biotech firms that are heavily reliant on a single product, Incyte's diversified pipeline offers long-term stability and reduced risk. And with new trials in advanced stages, they're not just maintaining their position, they're pushing forward. Of course, investing in biotech always carries risks, from regulatory hurdles to competitive pressures. But Incyte has a track record of navigating these challenges effectively. They've proven time and again that they can adapt to market shifts and deliver results. Now let's explore the next steps for investors. If you're looking for a balanced growth stock to get rich in 2025 and beyond, Incyte offers the best of both world stability from established products and upside potential from an innovative pipeline. This is a stock worth watching for those who value both reliability and growth. Let's shift gears to industrials. Alcoa, the aluminum powerhouse, is making a major comeback. After weathering a rough patch, Alcoa is now rebounding with impressive momentum. Analysts predict their earnings to jump 314% next year, making it a top contender to help you build a solid portfolio and, of course, get rich with this stock. Here's why Alcoa deserves a spot on your radar. Aluminum has transformed from a material for soda cans into a critical component driving the future-powering industries like electric vehicles, EEVs, renewable energy, and sustainable construction. Lightweight, durable, and recyclable, aluminum is in high demand as companies shift toward greener solutions. Alcoa's dominance in this market positions it perfectly to capitalize on these trends. Think about it. EV giants like Tesla and Rivian rely on aluminum to make their vehicles lighter and more efficient, while renewable energy projects from solar panels to wind turbines depend heavily on aluminum for infrastructure. Alcoa sits at the heart of these booming sectors. But Alcoa isn't just riding the wave, it's leading it. Earlier this year, Alcoa acquired Illumina, strengthening their supply chain, cutting costs, and ensuring consistent production. This strategic move enhances profitability and solidifies their market leadership. Meanwhile, their focus on low-carbon aluminum production aligns with the growing ESG, environmental, social governance trend, making them a preferred supplier for corporations looking to reduce their carbon footprints. The urgency is clear. Climate change, once dismissed by many as a conspiracy, is now a harsh reality. Take Spain, for instance. Once known for its sunny climate, the country is grappling with catastrophic floods, costing lives and billions in damages. Companies like Alcoa are stepping up, showing the path forward with sustainable solutions. Now let's talk about what to do as an investor. Alcoa is more than just a materials stock. It's a stake in the future of transportation, energy, and construction. Keep this giant on your watch list if you're serious about building wealth while supporting a sustainable world. Next on the list is Vericel, a small but promising biopharma company specializing in sports medicine and severe burn treatments. Vericel has had a rocky profit track record, but analysts predict earnings will grow almost 277% in the upcoming year. That's a fourfold increase, making it a standout stock in the healthcare sector. So what sets Vericel apart from other biopharma companies? For starters, they focus on highly specialized markets like autologous cell therapies, where a patient's own cells are used to repair damaged tissue. This niche approach gives them a competitive edge, as fewer companies operate in this space. Let's dive into one of their flagship products, MAC-I, a treatment for knee cartilage repair. Imagine an athlete who suffers a knee injury, a common issue in professional sports. Vericel's MAC-I provides a solution that not only repairs the cartilage, but also restores mobility, helping patients get back to their active lifestyles. This isn't just a win for patients. It's a win for investors who want to back innovative healthcare solutions. Another key driver for Vericel is Epicel, a product used to treat severe burn injuries. With advancements in trauma care and increasing hospital adoption of their technology, Epicel is set to see higher demand in the coming years. The global market for burn care is projected to grow to $3.5 billion by 2030, giving Vericel a strong runway for growth. Now, let's talk numbers. Vericel's projected 23% jump in sales next year isn't just impressive, it's evidence of their ability to scale their business. And despite their smaller size, they've been making strategic moves to expand their market reach, including partnerships with healthcare providers and targeted marketing initiatives. Solution for investors. If you're looking for a smaller cap stock with big growth potential, these company stocks could be your ticket to get rich in 2025 and beyond. Their focus on high-demand, niche markets, and innovative treatments makes them a compelling addition to any healthcare-focused portfolio. Now let's dive into RadNet, a leader in diagnostic imaging. This company is riding the wave of AI-driven healthcare innovation, and their earnings are forecasted to grow 179% next year. That kind of growth makes it a prime candidate to help you make money. RadNet isn't just your typical healthcare company. It's revolutionizing diagnostic imaging with artificial intelligence. Imagine a world where a machine can detect diseases like cancer or cardiovascular issues far earlier than traditional methods. That's the future RadNet is building. and it's a future that could save millions of lives while generating massive profits. One of their most exciting developments is their use of AI to analyze imaging data faster and with greater accuracy. For example, in cancer detection, RadNet's AI tools can spot abnormalities in scans that even experienced radiologists might miss. This not only improves patient outcomes, but also reduces costs for healthcare providers, making RadNet an invaluable partner in the medical field. Let's not forget their financial performance. RadNet reported a staggering 76% growth in digital health revenues last quarter, driven largely by their AI innovations. Their ability to integrate cutting-edge technology into their services has helped them expand their footprint, making them a dominant player in the diagnostic imaging market. Beyond AI, RadNet is also expanding its network of imaging facilities. With over 350 locations across the United States, they are the go-to provider for millions of patients. This combination of physical presence and technological innovation gives RadNet a significant competitive edge. Now let's dive into the next steps you should take as an investor. If you're bullish on the future of healthcare and technology, RadNet is a must-watch. With its blend of traditional services and AI-driven innovation, it's not just a stock. It's a stake in the future of healthcare. Add RadNet to your portfolio if you're serious about getting rich. These stocks have potential. Finally, we have GE Vernova, a spin-off from General Electric that focuses on energy assets. This once struggling business has transformed itself into a forward-thinking leader in renewable energy. Analysts forecast its earnings to grow 158% next year and beyond, making it a key player to help you build a profitable portfolio. What makes GE Vernova such a compelling investment? The world is transitioning to cleaner energy, and GE Vernova is leading the charge with its innovative solutions. From offshore wind turbines to advanced grid technologies, this company is at the forefront of the green energy revolution. The renewable energy market is expected to grow at a compound annual growth rate of 8.4% through 2030. And GE Vernova's products are central to this transformation. One standout opportunity is in offshore wind energy. GE Vernova is developing massive wind turbines capable of generating energy at a scale never seen before. These turbines are not just about power, they're about making renewable energy more efficient and accessible. While the company has faced challenges, such as delays in offshore wind orders, their long-term strategy remains solid. Let's talk about the financials. GE Vernova isn't just relying on hope, it's backed by tangible growth. The company recently reaffirmed its 2024 guidance and continues to secure major contracts in key markets. Moreover, their focus on energy efficiency and grid modernization positions them as a trusted partner for governments and private entities alike. Imagine a future powered by clean energy, where wind, solar, and smart grids replace fossil fuels. GE Vernova is turning that vision into reality, creating a sustainable future while delivering profits to investors. Let's explore the next steps for investors. If you want to align your portfolio with the renewable energy boom, GE Vernova is a no-brainer. As one of the most innovative players in this space, it's not just a stock, it's an investment in the future of the planet. Add GE Vernova to your list if you're serious about getting rich. All right, folks. Now that you've seen why these 7 stocks can make you rich and worth your attention, let's talk about the practicalities, how to invest, where these stocks are listed, whether they pay dividends, and what you need to know about investing in them globally. Are you ready? Let's start with the basics. All 7 of these stocks are traded on major U.S. exchanges, making them easy to access for most investors. The first, Vertex Pharmaceuticals, VRTX, listed on the NASDAQ. Let's move on to TG Therapeutics, TGTX, also on the NASDAQ. Next, Incyte, INSY, available on the NASDAQ. Moving forward, Alcoa, AAA, traded on the New York Stock Exchange, NYSE. Up next, Vericel, VCL, listed on the NASDAQ. Next, RadNet, RDNT, you guessed it, on the NASDAQ. And finally, GE Vernova, GIV, This energy innovator is traded on the NYSE. So whether you're using a US-based brokerage or an international trading platform, these stocks are relatively straightforward to access. Now let's dive into the exciting part and discover which of these stocks pay dividends. Here's where things get interesting. Most of these stocks are growth-oriented, meaning they reinvest their earnings into expanding their businesses rather than paying out dividends. Let's break it down. Vertex, TG Therapeutics, Incyte, Vericel, and RadNet. These companies don't currently pay dividends. They prioritize growth, which means more potential value for long-term investors. Let's take a look at Alcoa. Alcoa does pay dividends, though the amount and frequency can vary based on performance. Historically, it has paid quarterly. Up next, GE Vernova. As a recent spin-off from General Electric, its dividend policy is still evolving. Remember to keep an eye on company announcements for updates. You might be wondering, can you invest in these stocks globally? Yes, you absolutely can. Even if you're outside the US, investing in these stocks is possible through international-friendly brokerage accounts. Platforms like Interactive Brokers, eToro, and others allow global investors to trade US-listed stocks. Just be mindful of the following. First, currency exchange rates. Fluctuations can impact your returns. Secondly, tax considerations. International investors may face additional taxes on US stock dividends or capital gains. And third, local regulations. Some countries may have restrictions on foreign investments. Always check before diving in. Let's shift our attention to the pros and cons of these stocks. Let's start with the pros. First, high growth potential. These stocks are leaders in industries like biotech, industrials, and renewable energy, all booming sectors with massive upside potential. Secondly, diversification. By investing in different industries, you spread your risk while tapping into multiple growth trends. And the third, market leadership. Many of these companies dominate their niches, from Vertex's biotech breakthroughs to RadNet's AI-driven healthcare innovations. But every rose has its thorns. Here are the cons. First, volatility. Stocks in biotech and emerging markets can be highly unpredictable. Be ready for ups and downs. Next, dividend policies. Most of these companies don't pay dividends, so if you're looking for regular income, this list might not align with your strategy. Finally, market risks. Regulatory changes, competition, and economic conditions can impact performance. Now let's talk about how to approach these stocks. Here's your roadmap to getting started. First step, do your homework. Research each company's fundamentals, earnings reports, and growth strategies. Know what you're investing in and consult a financial advisor. Second step, open a brokerage account. Choose a platform that offers access to US stock markets and suits your needs, especially if you're investing from overseas. Next step, start small. Diversify across a few of these stocks instead of putting all your money into one. Finally, step, stay updated. Keep track of company news, quarterly earnings, and market trends. Being informed is your best tool for success. These stocks represent more than just numbers on a screen. They're opportunities to position yourself for growth in industries shaping the future. So whether you're in the US or halfway around the world, these 7 stocks have the potential to grow your portfolio and could be your ticket to financial success. And there you have it, folks. Today, we learn about 7 stocks that can potentially help you on your journey to get rich in 2025 and beyond. We've explored everything from cutting-edge biotech companies, revolutionizing healthcare, to industrial giants, driving sustainability, and the future of energy. These stocks aren't just numbers. They're opportunities to align your investments with industries shaping the world. But let's quickly recap. We uncovered which of these stocks pay dividends, how often they pay, and how you can invest in them, even if you're outside the US. More importantly, we discussed how to approach these stocks with confidence. Research, diversify, and stay informed. Investing isn't about guessing. It's about making strategic decisions. And now you have the tools to do just that. Now, here's your next step. Decide which of these stocks align with your goals and start taking action. Remember, The stock market rewards the patient and inform not the bystanders. Whether you're looking for high-growth opportunities, long-term stability, or exposure to booming industries like renewable energy, this list has something for you. As we conclude, it's important to note that this video is meant to educate you on the various aspects of investing, not to provide specific investment advice. Investing involves risks, and you should always do your own research and consult with professionals before making any financial decisions. Past performance doesn't guarantee future results, so always consider the risks involved. Before you go, let me ask, which of these stocks excites you the most? Drop your thoughts in the comments below. I'd love to hear your picks. If you found this video helpful, I highly recommend checking out my next video, which complements this one perfectly. Don't hesitate to share this video, it might help someone else too. Subscribe to the channel. Thanks for watching. And remember, keep learning, keep investing, and keep building your future. I'll see you in the next video.